The Fed is meeting today. Daniel, what are you expecting? I mean, the market's just like blah, but I feel like we're doing this right before the meeting, a couple hours before the meeting. And all the time when I report this, I'm like, the Fed's not going to cut. And they're going to be like, okay, kind of, I would say not hawkish, not dovish, definitely not dovish, but, not too. And next thing you know, you're going to see the market up or down 300 points. There's a lot that can move the markets of what they're going to say. They're not going to do anything. They're not going to touch rates, but it's what they're going to say, what everyone's going to be listening to. What are your expectations and what's the Fed going to say is going to drive the markets higher or lower?
I think the market reaction will be positive. So buy your puts now and short everything. I agree with you. They're not going to do anything. I think, unfortunately, did you see Trump's comments or kind of brief press conference during the flagpole thing today?
No, did he call him stupid? Is that the one he called him stupid?
Okay, of course he called him stupid again.
I was going to say, so the expectations are for no cut, followed by a few Trump tweets calling Powell an idiot. So those are the expectations. So.
Yeah, the aggravating thing is, my opinion, listen, they have, no pun intended, they have the best Trump card. They can play the uncertainty card, which makes them look silly, in my opinion. They can claim to not be political. I've already explained they're extremely political, whatever. The point is that since Trump made those comments today, which shouldn't shock anybody, I think the Q&A is going to be kind of overtaken by that. And Powell's been very good in saying, hey, I'm not going to comment on that, this and that and the other. What I want people to focus on and listen for is everybody's all of a sudden this fiscal hawk and wants to really get our house in order. And all these guys, Republicans and Democrats, are such spineless, lying idiots. It's just hilarious. If you don't learn to laugh at it, you'll go insane. But here's what to listen for. Because Trump's now claiming, hey, Frank, I need lower rates because we got to refinance all this debt. And of course, every politician blames the other one. So guess whose fault it is? Of course, it's Biden's fault. He did so much short-term debt. If Powell would just lower interest rates, we would save all this money on the debt payments, because what are you hearing about right now is the big, beautiful bills getting tossed around, debts, deficits, and all that kind of stuff. I think it'll be much ado about nothing. What I would like to get into, Frank, and hear your opinion is, I think that the question should not be about what's Trump saying about you, because that's just political clickbait and headlines. What I think they should talk about is, why are you not lowering? Because everything you've been saying is now in your favor. So tell me now, again, they're going to just do the same old song and dance. But if you don't think, the listeners out there, if you roll your eyes when Daniel Creech says everything is political, then you explain to me how Powell is not being political. I don't have to. Let's hear it, Frank.
Listen, we discuss topics and we don't tell each other how we're gonna approach it, and we just go on here and go at it, and we could disagree and agree. I am 100% in agreement with you. I have no idea why Powell's not lowering rates right now. I mean, inflation has fallen off a cliff. It's absolutely crashing. If you look at the last 6 months, it's crashing. You can look at the charts. You could say, Frank, you're crazy. I'm paying. I'm just talking about the gauge that they look at, the PCE or the CPI or whatever. They're crashing. They're completely crashing. If inflation expectations are now down to 3%, along with the 3 to 5 year expectations, which are a big deal. That's what the Fed looks at, right? The 3 years under 3%, the 5 year expectations is 2.6%. This was the reason Powell said we need to see inflation come down closer to the 2% level. It's trending there. What are you going to wait till it gets 2%? It's trending there right now. We're seeing that tariffs aren't having the effect that everybody thought they had, because maybe people already raised prices and there's alternatives for different things. You can't just raise prices today. You can't say, wow, well, because of tariffs, we're going to raise prices. Well, if you're a food company or whatever, you're going to go someplace else, and it's going to be alternative that they're not impacted by those tariffs, and they're going to keep their prices lower, and consumers are going to adjust, and you want proof of that, and more proof that why the Fed should be cutting. Look at retail sales. Retail sales fell off a cliff, right? It's not just retail sales, right? So it's retail sales that have fallen off. Down nearly 1%. Down 1%. When do you see retail sales actually decline? Funny, because April's retail sales number that was higher than expected, it got revised to the negative as well. You're seeing this happen. You're seeing with the housing market really starting to pull back in terms of prices. Starts and building permits just came out. That was early today, much worse than expected. Homebuilder sentiment is at pandemic lows. I mean, who the hell's buying a house right now? Who could afford it? Right? So you're throwing in higher oil prices and other extra costs most consumers can't afford. And you can say, well, that's temporary fun. That is temporary. Okay. But still, everything else is not temporary. When you're seeing the pullback in retail sales, when you're seeing, home prices coming down now across the board, even in good areas, I can't think of one reason why the Fed is not cutting.
Politics, right?
I can't. Other than that, because the Fed funds futures, they're predicting their first cut to come in September. Now, what I'm looking for and what could drive the market, 300 points either way. I think we're going to see a 300-point move. I like saying this because we'll talk about Circle in a minute. It was going to open at 32. I said it's a $100 stock. I didn't know it was going 100 that day. We said the same thing with CoreWeave, right? So I like talking before because it puts the pressure on. That's what we do. You basically follow this podcast to make predictions, and a lot of people like make predictions after the fact and play Monday morning quarterback. I like to make predictions before they happen to see what happens. So I'm saying that after the Fed meeting, the market's going to go up or down 300 points based on this. Powell has always operated where he doesn't like surprise in the market. That's most Fed chairman. He needs to talk about the cut because it's happening in September if he's going to do it. So he can't go on with his normal speech pattern over the past 10 meetings. Oh, you know what? Well, we're okay and we see no reason to cut this and that. You can't go on with that. Inflation, you see inflation come down tremendously. The job market is still okay. Unemployment is pretty strong. So you could definitely cut now. But based on what he's going to say is really going to move the markets. Because if it's the same tone that we've seen, and we're not going to see a cut by September, you're going to see the market adjust to that. And I bet you the market's going to go down over 300, 400 points. And if he actually is more dovish and saying, hey, you know what, we may, and he should be saying that because September's around the corner. It's not that far away. You got September and December. You got 3 meetings, I think, left for the rest of the year. Okay, remember, we're supposed to have 6 cuts, 5 cuts. Now it's 1, 2 cuts. 2026, it's 3, 4 in total, right? So 2026, are you kidding me? That's it? I mean, that's crazy to think 2026 with a new Fed chairman coming in, elected by the President of the United States, Trump, who's going to tell that guy, basically, I'm going to ruin your life unless you listen to exactly what I say. Whether you like that or not, that is going to happen behind closed doors. That guy's going to lower rates tremendously, at least by a percentage, maybe a percentage and a half next year. But right now, the Fed, what Powell talks about is really going to drive the markets. And he cannot say, if he intends with the market expecting a cut in September, it's not that far away, he cannot have the same exact structure, the same tone that he's had in past meetings. He's got to kind of hint at that going forward. And if he does, we could see the market go up a lot. If he doesn't, you're going to see the market pull back because there's no reason why, based on his own words of want to see inflation lower, unemployment has stabilized. Unemployment is historically low. We're doing fine. He could actually cut rates, and I think he needs to. He needs to start, but there's no reason why he shouldn't.
One thing that Trump said today, he foreshadowed this, and like him or hate him, he foreshadows and he's transparent. He said, Frank, he talked about the debt coming due. And like I said, we've been hearing a lot about that. And you can look at different examples, but you can say, hey, if we cut 1 full point, we would save X amount in interest payments, or if we cut whatever. Frank, Trump actually said, we could cut 1 point. We could cut 2 full points. I mean, the guy is just beyond, says whatever he wants. He said, Frank, listen, Biden's fault because he did all short-term debt or mostly short-term debt. And for context here, basically the government, Frank, is refinancing $9 to $10 trillion in fiscal year 2025 for bonds and stuff like that. To put that into perspective, that's 30% of GDP. That's on the high end of historical, obviously. But the point is, Trump said, listen, we're going to refinance all this short-term debt, and that's why we need lower rates. Well, basically, I'm just going to refinance the short-term stuff until my guy gets in there, and then we'll focus on long-term debt refinancing. He is saying, hey, the next guy is going to cut rates. Yeah. Powell needs to do it ahead of time. So you got, like I said, you can love him, you can hate him, but that's what's going to happen. Don't fight that. Real quickly, let me give you a Fed Chair Powell a bone here. Because in Fed Chair Powell's defense, he does have the easiest card to play. Listen, we have uncertainty. We don't know how these tariffs are going to impact the economy. We don't know if inflation is going to come back. And we've been talking about this, Frank, and this true inflation is that I've talked about, Trueflation, that does real-time data. It now shows the U.S. inflation index at 2.12%. Now, that's the rise of inflation, not the cost. But that is up significantly from about 1.5 just a month ago. Okay. So he doesn't look at that data, supposedly. My point is, he has the perfect card of uncertainty, but at some point, and I've already way past this, how do you not lose character and credibility when you just keep saying, oh, well, there's just too much uncertainty. Oh, there's just too much uncertainty. Yes, maybe tariffs come into play downriver, but you have to pay attention to the present right now. And again, you've said in the past, you're not going to wait until inflation hits your target. You have to cut beforehand. And now you're not doing it. And the only reason is because it would make Trump look good. And that's a no-no in the inner circles. And I know, real quickly, Daniel at CurzioResearch.com. Well, Trump nominated Fed Chair Powell. Yes, he did. Look at how many terrible, awful people have backstabbed or gone against the wishes of the sitting president during his first and second administration. So just because Trump says a nice thing about somebody, because he's got a long list of fill, doesn't mean that they're best friends.
And I don't know about the true inflation figure, how it's calculated. All I know is the only thing you should care about is inflation. Seriously, I know I pay my bills just like you guys pay your bills. I know inflation has been going up. I'm not even talking about since 2022, right? And post-COVID, when our government decided to spend like maniacs, trillions and trillions after the fact that all asset prices were at all-time highs at the end of 2020. Even before that, we see it. We know the bills we pay. And I always said, 20 years, listen, ignore that because it's not what the Fed looks at. Okay, it's not going to make you money in the stock market. Okay, you got to focus on what the Fed, which is a PCE, which is a CPI, that's what they're looking at, and those things are crashing. Now, if Powell comes out and pounds his chest and says, I hate Trump or whatever, I'm not lowering rates, whatever it is, the market pulls back. If the market pulls back considerably, buy the shit out of it. Just buy. Next year, we're going to have a new Fed chair, which Daniel and I just discussed. I mean, they're going to lower rates incredibly, that person. Couple that with deregulation, which is coming for the banks. They're going to be able to lend out more money, lower taxes, higher government spending, which we know government spending, they're not going to slow down anytime soon. We know by this bill that he's trying to pass. Again, I'm not taking sides. I don't care if you're Republican. I don't care if you're Democrat. The only thing that I give a shit about is making you money. And we've been doing a great job doing that, especially over the past 6 months. You should be up on a lot of stuff that we've been talking about, special individual names, of getting emails, of getting, which is really great, which is why we do this, right? For you guys to make money. So it's not about politics. It's not about, wow, they're spending money and it's crazy. And all. It doesn't matter. They're going to continue to spend money, which is great for asset classes. But when you look at everything that's coming down the line, you have a clear recipe for assets, notably stocks, to go considerably higher by next year. And if the market pulls back, I'd be buying on that pullback. So let's see what he says. We'll address that tomorrow in our Wall Street Unplugged premium podcast. Again, that's $10 a month that we have. We really get into details. We have a whole portfolio of trading opportunities. A lot of the names that we talk about, you see in that portfolio, which we've been up a lot on, which is fantastic for our investors. So that's a more detailed podcast. If you want more information on that, you can go to curzioresearch.com to subscribe. Again, it's worth every single penny considering the amount of stocks that we talk about and recommend, right? Probably 40 to 50 stocks a year that we're recommending as trading opportunities in that portfolio, which is really cool. But we'll talk more about the Fed tomorrow on that podcast.